which you're supposed to know, you must be able to appreciate regression in the context of the simple one, the simple regression analysis, and then the multiple regression analysis. Now, in simple regression analysis, I don't have to belabor. In simple regression analysis, you are writing there. So I'll be able to give you some kind of introduction. So for simple regression, so we have here simple regression analysis, simple regression analysis. So remember that this is also known as a univariate regression analysis, also known as univariate regression analysis. Univariate regression analysis. Uni means what here? Uni means, ladies and gentlemen, one variable, one predictor variable. So if you remember very well, regression analysis basically is used to develop, regression is used to develop equations of the form of y equals a plus bx. Equations of the form y equals a plus bx. So regression is used to develop equations of the form y equals a plus bx. Where if you remember very well, a is the intercept. So this is the y-intercept. The y-intercept will be our constant. In terms of cost estimation, this will be fixed cost. This will be fixed cost like that. This will be fixed cost. That is A. All right. And then we have B, which is the gradient. We have B, which is the gradient. B, which is the gradient. So gradient will be our variable cost per unit. Variable cost per unit. So let me know whether you great ninjas have been able to write up to here. Let me know whether you've been able to write up to here. Yeah, because you should not, the board is not clear. They are saying the board is not clear. From my side, it is really clear. Maybe what I can do is to increase the font size. From my side, it's very clear, but maybe increasing the font size could help. How about now? Very clear. Okay, great. It's clear, yeah. Okay, great. So, and they've been able to write up to here. Now, ladies and gentlemen, in this case here, yeah, don't worry, Maggie, we shall be able to move very fast because after exams, you can see the number has really swollen, eh? The number has swollen, Maggie, let's accommodate everybody, right? Let's accommodate everybody, yeah. And remember, ladies and gentlemen, that regression analysis gives us the methodology for getting B and A. And if you remember very well, using regression to get B, we take n summations of xy minus sum of x, sum of y. All over n summations of x squared minus summation of x done what here? Squared like that. That's how we get the gradient. Using regression analysis, this is how we get the gradient. And then to get the y-intercept A, we will take summation of y minus b summation of x divided by n. So we must be very good at this. Yeah, so in this case here, Perezi, we can take this as our first session. Eh? Don't worry about what we've been doing. This is a new program. So take this is our first session, and we haven't written a lot. So in this case here, this is how we get the value of B and the value of A. I'll give you a very short example before we look at the question that came just the other semester. I'll give you a very simple illustration. If, for example, ladies and gentlemen, you are given just three factors here, three numbers here, three data values, you are given x, y, yeah. So they give you 3, 8, and maybe 12. Then they come and they give you here 15, yeah, 18, and 21, like that. And then you are required in this case here to get the value of B and A, required regression equation. They want you to get a regression equation. So you can see here we only have one predictor variable. So this is univariate. Remember, we've got two types of variables. We have the dependent variable, dependent, which is y, and we have the independent, which is x. So here we can only come up with this kind of an equation, y equals a plus who? Y equals a plus bx. Y equals a plus bx. All right? So we only have one predictor. So this is a simple equation. So then if you give me this kind of an equation, how will I be able to come up with this regression equation? Come here and create a column for xy and a column for x squared. If you're doing regression, you need those two columns, a column for xy and a column for x squared. So basically, you want to take care of this xy and this x squared. So then can somebody do these multiplications for me? 3 times 15, this gives me 45, right? 45. How about 8 times 18? 8 times 18, 144. Thank you very much. How about this crazy figure? 12 times 21. 12 times 21. So please, I'm building onto something very great. And we have said this time around, we are not missing on any fundamental principle. We must, in this case here, get all the principles for us to be able to do these past paper questions. All right? Then come and square x. So this is x. When I square this will be 9. 8 squared gives us 64. 12 squared gives us 100 what here? 144. 144. So after that, my great students, regression is a sigma model. So go ahead and give us summations. So give us here summation of x. Is there somebody who can add this for us? So summation of x, this will be 11 plus 12. That gives us 23. Thank you so much, 23. How about summation of y? Summation of y, please add everything and write what I'm writing here. Summation of y, it's important. So this will be 15 plus 18 plus 21, which will end up giving us what figure? 54, which will end up giving us 54. From there, ladies and gentlemen, we have here summation of xy. So summation of xy equals, you're adding 45, 144, 252. What do we have there? 441. So here we have 441. Thank you so much. And then lastly, we have summation of x squared. So summation of x squared, we have 9 plus 64 plus 144. Plus 144. So this gives us 217. So then the very first thing, ladies and gentlemen, that we shall be able to do is to come here and get the value of b. Let's get the value of b first. We get the value of b. So who is able to give me the value of n? N represents the data points, xy, 1, xy, data points. So these are 3 points. N is 3. So in this question, n is 3. So then we have here 3 times sum of xy. Sum of xy, already we have it. Sum of xy is 441 minus summation of x, which we already have, 23, times summation of y, which is 54, all over n again, which is what here? 3, times summation of x squared. Summation of x squared, already we have it. This one here, 217, minus summation of x into brackets. So this summation of x here, 54, and then you put this squared like that. Then you get ahead and give me the numerator first. So you get the numerator first. So numerator alone, you say 3 times 441 minus 23 times 54. What figure are we getting? According to Helen, we are getting 81. Thank you so much. We are getting 81. And then we have here 3 times 217 minus 54 squared. Minus 54 squared, which in this case here will end up being equal to what here at the end of the day? Yeah, remember it has to be, summation of x, I'm told, is not 54. Sorry, I took summation of y. I'm really sorry. It's supposed to be 23 squared. It is summation of x here. Thank you so much for that. It is 23 squared. Thank you so much for that. So somebody is giving me a figure of 122, meaning that the value of b will end up being 0 point something. The value of b will end up being 0 point something. So it will be 0.66, right, Maggie? 0.66, yeah, somebody has confirmed up there, I can see 0.66. Thank you so much. So from there, please go ahead and give us the value of A, which will be summation of y minus b summation of x all over n. Therefore, A will be summation of y. Summation of y, we have it. It is 54. Minus the b that you have just gotten here, which is 0.66, times summation of x. Summation of x, ladies and gentlemen, here is 23. Everything to be divided by our n, which is 3. Again, get the top line. Get the top line first over the top. So 54 minus 0.66 times 23. What shall we be able to get at the end of the day there? Top line first. The top line. The top line. What do we have there? Top line. So are they giving me the final answer? 38.82. So 38.82 is the top number divided by 3. So then the final answer will end up be giving us what figure? The final answer will end up giving us 12.94, isn't it? 12.94. Or thereabout. You can as well get 12.8. Rounding off errors are allowed. And therefore, the regression equation is y equals a plus bx. So it is y equals a, which is 12.94 plus b. B, which is what here? B already we know. It was 0.66. So once you have gotten the 2a and the b, you come and substitute for them like that. This is the answer. So up to here, ladies and gentlemen, somehow are we together? Somehow are we together up to here? Yeah, great. So then you'll be able to allow me to now show you, your examiner will rarely. It's once or twice he has tested us for the last 10 years regarding these formulas. What your examiner will do always, he'll give you what we call ANOVA table. He'll give you what we call multi-regression analysis. He'll give you what we call the ANOVA table. He does that every time. And whenever he does that, he normally knocks off students off their feet. Then they fall down. Pungulu. Like that. ANOVA table. Yeah, in most cases, they will test you on multiple regression analysis. So basically, in this case here, under multiple regression analysis, we are given 2 or more predictor variables. So in this case here, we have many predictor variables, many predictor variables. We'll be given many predictor variables. So when you are given many predictor variables, the examiner will not examine you in terms of getting the value of B and A using formula. He will give you a computer output. A computer output will be provided. A computer output will be provided, and then our work will be to interpret the output. And the most important thing that most students are not able to interpret is what we call ANOVA table. This is really what in this case here scares so many students. ANOVA stands for analysis. Ukishajua hiyo ni hivyo. ANOVA stands for analysis of variances. Analysis of variances. Of course, I'm preparing you in advance to be able to know what is expected of us. Analysis of variance. So please feel free to ask questions. As you'll be seeing, this is the best paper under CPA. Nobody should ever cheat you. You can't compare this with the AFM. It is only that you need a proper approach. Once you have a proper approach, then that will be it. We will be able to overcome very easily. Regression PDF, yeah. Great. And then I can attach it. I don't know why Zoom was misbehaving. In terms of iMove, yeah. Boss, thank you. It's a simple paper. It's a straightforward paper. But of course, with very high failure rates, so many guys may first of all upload this so that I can talk. Sometimes it becomes hard to multitask. Yeah. Great. Okay, great. I think I'll just be able to send this later. No worries. Let me just teach without sending it now. So then this is how your exam advanced MA will look like. So this is quite an old question. It was a quantitative analysis question, but very relevant to you. All right. So forget about part A, part B. So for part B, they want us to compute the values of A, B, C, D, and E. Yeah. Then number 2, they want us to give them the estimated regression model. Number 3, we test the explanatory power of the model. 4, test the statistical significance of each of the predictor variables, x1 and x2, use a significance level of 5%, comment on the statistical significance of the model as a whole at 5% significance level, given that F table's value is 3.98. So this question, ladies and gentlemen, I will be able to get 100%. I can't miss even a single mark here because it's very well structured. Just like it came last time, it is very well structured. Yeah, students who knew this were able to get all the marks. Yeah, last semester they gave us this kind of a question. So we are told here, a study was conducted to examine the predictive ability of economists and finance specialists on the future performance of their country's economy. Equal random samples of economists and the finance specialists were asked to make predictions of the percentage change in GDP of their countries. A year later, the actual performance change of the GDP was regressed against the economist predictions and the financial specialist predictions using statistical software. Yeah, they'll give you a computer output. So below is part of the computer output. So here there was an error, just I will be able to correct here. So they've given us parameter estimates, very easy. And then they have given us analysis or variance. This table is the one that disturbs very many students to interpret. So first of all, I will copy this on the board for you to be able to see where the error is. The parameters table, I have it. Parameters table. So the parameters table, I'll copy it, and then I'll be able to ask you to put it down because there is just a tiny error there. So we have here the parameters table. Parameters table. So I have the variable. I have a coefficient. That is okay. I have standard error. Standard error. We have the T ratio. Okay, so constant is what was missing. And then now we have x1. We have x2. Just allow me to finish copying this down. So we have here 0.983. Then we have B. Then we have 0.587. Then we have the standard error. The first one there is A, 0.257. Then we have 0.225, 0.225. Then we have 0.34. we have 2.42, sorry. And then lastly, 2.61. So kindly copy this table down. What we skipped here, under the variable, we have a constant immediately beneath there. So just copy this table the way I've been able to draw it here. So we have the parameter estimates or the parameters table, the numbers table. So we have the variable where we have constant x1, x2, coefficient 0.983, b 0.587, standard error. We have a 0.257, 0.225. T ratios are also given there. For those of you who did the quantitative analysis just the other semester, you must be remembering how to do these, questions here. If you did QA last semester, but one, even if you don't remember how to do them, at least you remember that we have what we call multiple regression analysis. At least. I'm not going to make any assumption, but I just want to tell you that this is something that is very easy, which is normally taught to those students who normally come from high school. So you're going to understand it within 5 minutes. You'll be able to understand it within 5 minutes. So once you finish copying this, will you let me know by putting your thumbs up? Yeah, at least Maggie has finished. So I'm waiting to get like 5 thumbs up like this, because that will be a good representative. Yeah, Mildred, thank you so much. Dan, thank you so much. Yeah, so I think now we are okay. So the first thing that they want us to do is to give them the missing values. Like last semester, they told us to give them the missing values. Tell them what is A. Here, the most important thing is for you to remember the formula of getting this T ratio. I'll be giving you this table, but before I give you the table, to get the T ratio, we normally take the coefficient given all over the standard error. Yeah, very, very important. Very, very important for us to know this. Anytime they want us to get the T ratio of any of these variables, we shall take the coefficient given, and then you divide that by the standard error. So for example, if this one here was missing, and somebody wanted us to calculate this T ratio, how would have we gotten this T ratio? We would have taken this coefficient, which is 0.587, divided by the standard error. The standard error is 0.225. Can somebody in this case here confirm that you're going to get an answer which is close to this? 0.587 divided by 0.225. Can somebody confirm that we're going to get something that is close? It doesn't have to be exact. They're rounding off errors. 2.608. So it is 2.61, isn't it? So then what I'm coming to sell to you here this evening, ladies and gentlemen, is a simple formula. And this is the bedrock of this regression, multiple variable. But to get T ratio, you shall take the coefficient always divided by the standard error. I remember those old days when we were very young, when our mothers used to send us to the shops. In this case, you had to go and purchase Panadol and maybe Roico. You see on the way, you used to go singing Panadol, Roico. Yeah, but at the end of the day, again, you would even come back with the wrong product, but we overcame. So here, anytime we are sleeping, we shall always be forced to remember that T ratio is coefficient all over standard error. Now then, I would want us to calculate A. So I would want us to, I've given you the formula already. We have said here where A is. So what is the value of A? That is the requirement number 1. We've said to get T ratio, you will take the coefficient all over the standard error. Coefficient all over the standard error. The T ratio here where A is for this constant, the T ratio for this is 0.34. That is the T ratio I'm substituting. Equals coefficient, we know the coefficient is 0.983. The coefficient is 0.983. Yeah. Divided by the standard error for the first one, which is A. So I want us to make A the subject of the formula. So it will be 0.34A equals 0.983. Therefore, A will be 0.983 divided by 0.34. Is there somebody who is able to get this answer? Thank you so much, Robert. Every independent variable shall have its own T ratio. Yeah, actually, even constants that we have, like now this constant has its own t-ratio. X1 has its own t-ratio. X2 has its own t-ratio. That's a very, very good question. So they are telling me that Mwalimu A is 2.89. Therefore A is 2.89. 2.89. So is that okay? Or is there anybody who has a question? Is this okay, how you have gotten A? Yes. Then can you kindly go ahead and give me the value of B now on your own? Try, even if you don't get it. So what? Just try the value of B. You can see where B is, eh? So go ahead and get the value of B. According to this gentleman called Okeo Timon, I've never taught Okeo. Okeo, welcome to RCM. Yeah, thank you so much. Purity, I can see you already have the correct answer. So the most important. So go ahead and get the value of B. According to this gentleman called Okeo Timon, I've never taught Okeo. Okeo, welcome to RCM. Yeah, thank you so much. Purity, I can see you already have the correct answer. So the most important thing is to come and write here. They want us, ladies and gentlemen, to come here and give them the value of B. So of course you're playing around with the T-ratio formula. So we know that T-ratio equals coefficient all over the standard error. Yeah, so you come here. The T-ratio for this variable is 2.42. Equals coefficient of this variable is what is missing, B. All over the standard error is 0.257. Therefore, B will be 2.42 times 0.257, which will end up giving us what figure? That figure is correct. 0.62, isn't it? So we shall restrict ourselves to how many decimal places? Actually, 3. 3 would have been good. 3 would have really been good, but not a problem. Even if you have 2 or whatever, 0.6, 0.622, it doesn't matter what you have there. But if I were you, I would work with the higher, because I can see others, they're giving them to, in terms of 3 others, I would have gone with 3 throughout. So then this B, ladies and gentlemen, is 0.622. 0.622. So up to here, ladies and gentlemen, are we really okay? Up to here, are we okay, all of us? Thank you so much. And then remember that these parameter estimates, they always help us to write down the regression equation. They always help us to write down the regression equation. So remember, I'll be continuing with the other missing values, but because I'll be rubbing this board, please allow me to come here and mention their regression equation out of this regression equation. Let me ask you a question. This question that we have here, how many predictor variables? Remember, predictor variables are X variables, eh? How many predictor variables do we have? 2 of them, X1 and X2. And therefore, the general equation, regression equation, you know, the normal one is Y equals A BX. But now we have got 2 X values. So it will be Y equals A plus B1 X1 plus B2 X2. Have I known there are 2 because of this? There are 2 like that. Yeah. So remember, A is the constant coefficient. So A is the constant coefficient, which is this one, a constant coefficient. So now remember, these 2 are irrelevant in terms of equation formation. We are only looking at these parameters. So the constant is 0.983 plus the coefficient of X1. Coefficient of X1 is this one here. So 0.622 X1 plus, in this case here, coefficient of X2, which is 0.587 X2. This came last semester, and most of you are not even able to answer that question. It was a straightforward question. Yeah, Kipsang is saying that there is a mistake I've done, that the standard error, Kipsang, that's okay. Whenever I made an error, I want to believe you guys give me assurance up there, Kipsang, that you understood the concept. It's concept-based. Kipsang, even if I got an error now, I cannot go back. Please, you told me up there that the concept is home, isn't it, Kipsang? You told me that. It's okay, great. Let's continue, yeah. Let's continue. Yeah, so up to here, like how we have gotten the regression equation, are we okay? Is it okay now? Is it okay? So of course, this semester they can't bring this, although it's important for you to know. They can bring this again. But we shall overcome. We shall overcome. Hey, what has happened to my camera again? This thing is disturbing. Yeah, so up to here we are okay. Now, as I make up my camera, I would want us, ladies and gentlemen, I'm doing something there, don't worry. Yeah, I'm doing something there, don't worry. So we come here, ladies and gentlemen, and now go to the second table. Let's go to the second table. So the second table, you can see it is now actually the gist of today's session. Yeah, they have given me analysis of variance. We have source, regression, error, total. We have degrees of freedom, sum of squares, mean, sum of squares. Then we have the F value. So here, they want us to give them the value of D and the value of E. The value of actually C, D, and E, just like it came last semester. It was a QA question. A QA question they lifted. I'll be able to show you that question. A QA question they lifted to give you at this advanced level, which was really, really unfortunate. But should they try this time round, they will see what we call Ngethe's bad. Ngethe's bad. They won't believe. They won't believe. All right. So then let's copy down the table. Let's copy down that table. Let's copy down the table. Let's copy down the table. We call it the ANOVA table. ANOVA table. ANOVA table. ANOVA table. We call it the ANOVA table. We call it the ANOVA table. I hope it should be very clear as it was. ANOVA table. Yeah, we call it the ANOVA table. Yeah, now it should be okay. So this ANOVA table, what are they giving us, gentlemen, in this ANOVA table? So in this ANOVA table, they have given us source. So we have two sources. We have a regression source. So this regression is what you also call explained. This is what we also call explained. And then we have error source. So this error is what we also call unexplained variance. Unexplained variance. And then we have our totals here. Yeah. And then we have what we are calling degrees of freedom. Degrees of freedom. The explained degrees of freedom there are 2, 11, adding to 13. And then we have what they're calling sum of squares. Sum of squares. So sum of squares, what do we have here? Sum of squares, 2904.8, 100.1 C. And then we have what we are calling mean sum of squares, MSS. So the mean sum of squares, I can see D, and then I can see 9.1, and then I can see the F value. So the F value, I can see an E. I can see an E there. So first of all, let's put down this, and once you finish writing it, this ANOVA table, please mention there, yes, we are okay. Yeah, people have been able to confirm. Thank you so much. And now they want us to get this C. Can somebody in this case here tell me, what do you think shall we do to be able to get C? I mean, some of these things are purely what here, C. What do you think shall we do to get C? Yeah, we add. You can see 2 plus 11, they go 13. So even here we shall add. So 29, 04.8 plus 100.1. So D is 2904.8 plus 100.1. Not D, but C, sorry. C. I'm waiting to get a number from you. So this is 3,000, 4.9, like that. Thank you so much. Now you can see now you are answering me. You are the ones now who are giving me these answers. Last semester, you are not able to get those answers, but don't worry. You'll even see this next one and be able to get it right. What do you think shall we do to be able to get this D? D is the mean sum of square. Mean means division, dividing. You can even come and try dividing. You can take this divided by this and get this. So to get this D, to get mean sum of squares, you normally take the sum of squares given divided by degrees of freedom. Yeah, you divide, yes. So to get this D, then you will take, in this case here for D, which is mean sum of square, you will take the sum of square given here, as S is this. You will take 29, 04.8. We divide this by the corresponding degrees of freedom, which are 2. Yeah, and already somebody has an answer. They are telling me it is 1452.4, like that. All right. So, ladies and gentlemen, up to here, are we really following? Are we following? Are we following? Are we able to follow? Yes. Thank you so much. You just have to cram a little bit. Then from there, come to the F value. This F value is very, very critical for you. The F value, with your permission, I'll be able to rub this now. F value is very, very critical. F value is very, very critical. So to get this F value, we normally take the explained MSS all over the unexplained MSS. So anytime they want us to give them this F ratio or F value, we shall take this regression, mean sum of squares. Yeah, the one that you guys got here, which I rubbed, unfortunately. The one that you guys rubbed here, the D, the one that I've rubbed, the one that you got. So D equals what? 1452, yeah. 1452.4 divided by unexplained mean sum of squares, 9.1. Be able to give us the F ratio. Go to get this F ratio. So they're getting here 159.6, sorry, 159, which is really, really high. Very good. The higher it is, the better the predictor. But I would want to take these few minutes to explain what this stands for really. You see, when you do a regression equation, for purpose of forecasting, like for example, you've done a regression equation. We have in this case here 2 people who are fighting for presidency. We have Uhuru Kenyatta, we have Raila Amolo Odinga, the Honorable. So Sinovet, they come and do a regression equation for prediction. Come this future date, the right honorable prime minister will be able to win. Now, of course, when results in this case here come, I mean, things are upside down. Yeah, we've lost. Yeah. So in this case here, there will be that variation, which in this case here will be unexplained. And there is that variation that regression will be able to explain. So anytime you're doing predictions, ladies and gentlemen, there is that error, that variation, that variance, which will be explained. You'll be able to come and say, I mean, we expected 10, but we got 9. And because of this and this, yeah, some bad economic trend, we expected a dip. then regression will be able to explain. But you see now things like, for example, and I'm not political, I'm just using a bad example here. Things like, for example, theft of votes is not something that regression can explain. So we have got two types of variances in terms of regression analysis. We have what we call explained variance and unexplained variance. Then explained variance is our error term, is our error term, is our error term. Unexplained variance is our error term, what you're not able to explain. Yeah. Yeah, so that will be very, very important. Now, ladies and gentlemen, the other thing that I would want us to appreciate from the word go as I get now into deep depths of this is this. You see, we have got two types of degrees of freedom. We have got, actually there are three, but for you, for your analysis, you have two types of degrees of freedom, So we have total degrees of freedom, total degrees of freedom, total degrees of freedom. You can see a total degrees of freedom, 13. How do we get these total degrees of freedom? To get total degrees of freedom, you'd always take n minus 1. You'd always take n minus 1. Total degrees of freedom is n minus 1. Like in this question, they have given us the total degrees of freedom. We have 13, but you see they will not give you the sample size. Remember, n is the sample size. So n minus 1. Therefore, if you make n the subject, it will be 13 plus 1. So in that case here, n, which is the sample size, in this case it will be 13 plus 1, which is 14. So we must really be prepared to, because nobody will give you these degrees of freedom at this level. This level, they'll expect you to calculate. They'll give you the sample size. They'll joke around with you. They'll tell you the sample size is 14. So it is you to know that total degrees of freedom will always be equal to n minus 1. So we'd have taken 14 minus 1 to get 13. This is really critical for my foundation for this particular session here. How to calculate total degrees of freedom. If I were you, I would have actually highlighted this. This is really critical. Total degrees of freedom. The other one is what we call the error degrees of freedom. Error degrees of freedom. So at least I was trying to show you something here. Yeah, but we have ended up doing something even very critical because here they have given us the degrees of freedom. We have ended up getting, in this case here, the sample size, which is very good. Our sample size is 14. Now from there, we have the error degrees of freedom. Error degrees of freedom. Error degrees of, for those of you who have done a thesis like at master's level or PhD level, of course, you know these things I'm explaining here, you'll always interpret them. When you run your data through SPSS, yeah. So error degrees of freedom. So to get these error degrees, these ones say 11. Normally we take n minus k minus 1. N minus k minus 1. Anytime they tell us to get error degrees of freedom, we shall be taking n minus k minus 1. N is the sample size. N is the sample size. Then we have k, number of predictor variables. Number of predictor variables. Like in our case, we had x1 and x2. In our case, we had, if you remember the parameters up there, we had x1 and x2. So number of predictor variables or independent variables, they were 2. They were 2. And the sample size, we've just gotten here sample size of 14. So then the error degrees of freedom here, error df, will be 14 minus the sample size, sample size minus k, which is 2 minus this one. Don't ask me where that one is coming from. It's important to just cram that way. So 14 minus 2 minus 1, which will end up giving us what here? Thank you so much, Nancy. Yes, error is the same as the residual degrees of freedom. Yes, error is the same as residual. You guys are very, very bright. Very bright. Residual. Remember, residues are not good. These are errors. Residual. Yeah, residual. So then this one here gives me 11. That's how they got 11. That's how they got 11. Yeah. And then now we have error, not error, but regression degrees of freedom. But before I continue, is there somebody who has been able to pick what Mwalimu is discussing? Because next time they'll tell you X, Y, Z. They want you to calculate all this. At this level, they cannot give you this. These ones here, you shall calculate them yourselves. At least there are students who are able to pick. Thank you so much. And I hope you have been able to put this. That error is the same as residual, eh? Same as residual. Great. And then now we have the last one, which in this case here are the regression degrees of freedom. Regression degrees of freedom. Please, if you have Muslim students around and during your time of Maghrib prayers, we'll need to excuse you. You get to pray. Very, very important. Yeah, explain K. K is the number of predictor variables. You know, like we had this equation of ours. Where was A plus B1 x1 plus B2 x2? These are the predictor variables, and they were 2. Prayers, we need to pray. A purity, are you a Muslim really? We need a break, yes. We need to pray, yes. All right, so shall come back at exactly 703. 703. 703. 703. Thank you. Yeah, thank you so much. Thank you for that reminder. So Roman 2 already that is done. Roman 2, they wanted us to give them the regression model or regression equation that we did long time ago. Then now we have Roman 3. Roman 3. So Roman 3, they want us to give them explanatory power of the model, which is also known as the coefficient of determination, which is R squared. And R squared, I'm explaining here, R squared is the explained variance proportion. So I should be able to go back a little bit, just a little bit. That R squared is the explained variance proportion. R squared is the explained variance proportion. R squared is the explained variance proportion. And how do we get this? So this R squared is the explained sum of squares, explained sum of squares, all over total sum of squares, all over total sum of squares. So you take the explained sum of squares, all over the total sum of squares. Fortunately, we have the sum of squares. Explained is this one, 2904.8. All over the total. You guys had added this. You gave me a figure of 30 something. You had added this. You got this total here. Total sum of squares. Okay, fine. Okay, great. Yeah, fine, great. I'll be able to explain that, yeah. So total sum of squares, is there somebody who can remind me this before I go back to what this ninja called a Tomno is asking? 3,004.9. So times 100, whatever answer you get, times 100. Could you kindly give me this answer? So the higher it is, the better. Because, I mean, we'd want, in this case, ladies and gentlemen, to have higher explanations. Higher explanations. Higher explanations. So like what Irene is giving me, not Irene, but Lavi, Cynthia, 96.67. 96.67%. 96.67%. 96.67%. 96.67%. Yeah, 96.67%. Great. Great. Thank you so much. Now, ladies and gentlemen, please write there that the higher the R square, the better the explanatory power of a model is. The higher the R square, the better. The higher the R squared, the better the explanatory power power of a model is. Like now, this is very high. This is excellent. This is excellent. Excellent. Because our model, in terms of variations, our model we are able to explain up to 97, call it 97%. We can't only account for 3%. This is really good. This is exceptional. This is excellent. Excellent. So the higher the R squared, the better the explanatory power of a model is. Yeah, so I hope that is okay. The students who did last semester's paper, I'm so sure you guys must have gotten this correctly, isn't it? Or we should not talk about last semester. We soldier, we move on, isn't it? We move on, right? We should move on. Yeah, I also think so. But it's good for us to appreciate. Yeah, so in this case here, according to, we have here silver. Yeah, is it the total SS? Same as mean SS? No, no, no. Mean SS is when you divide. The mean SS, you take this divided by this. Average, you're averaging. This is a sum of squares. Here you don't use mean sum of squares, you only use mean sum of squares when getting F value. F value. So then now with your permission, I should be able to go backward a little bit and explain how that 2 was gotten. How that 2 was gotten. How this 2 was gotten. All right, so how do we get these 2? To get regression, or explained degrees of freedom, these one will always be equal to the number of predictor variables. Number of predictor variables. Number of predictor variables. Number of predictor variables. So remember we had y equals a plus b1 x1 plus b2 x2. These are the predictors. There are only 2. So remember these are number of predictor variables which is equal to k, which in this case here equals that 2. Thank you very much, Tom, No, for bringing that up. And I believe now we are okay. I believe we are okay. So can I take on now the next question? Can I go to the next question, my great students? All right. Now we are comfortable. We can go on to the next question. So the next question, ladies and gentlemen, what are they telling us here? In this question, what they are telling us here, great. They want us to test the significance of each of the predictor variables, x1 and x2. And they want us to use a significance level of 5%. So tell us the other term. In regression analysis, there are 2 types of hypothesis tests. There are how many types of hypothesis tests? 2 of them. There are 2 types of hypothesis tests in regression analysis. Or in regression analysis, there are 2 types of, hypothesis. Hypothesis or significance tests. All right. So in this case here, full colon, we are writing them. Number 1. So we have in this case here the parameter. The parameters or variables. Hypothesis tests. And then number 2, we have whole equation. Hypothesis test. 2 of them. Hypothesis tests. 2 of them. So we have 2 types of hypothesis tests. We have in this case here parameters, stroke variables, individual parameters, hypothesis tests. And then number 2, we have what we call a whole equation, hypothesis tests. Now for these parameters, stroke variables, hypothesis test, we shall always use what we call the T statistic. And here we shall always use what we call the F value statistic. F-value statistic. We shall use what we call the F-value statistic. Yes, I'll be able to share. I don't know why this machine of mine is letting me down, but I can promise you immediately after this, I will share. Yeah, so we have two types of hypotheses. Yeah, so of course the hypothesis here, the claim here is that our regression equation is working very, very well. But you see that is just but a hypothesis. So there are two types of hypothesis tests. We have in this case here what we call parameters hypothesis and the whole equation hypothesis. So for number one, not number one, but number three. For this number three, what hypothesis do they want me to do? If you look at this number three, number four actually, they want me to test the significance of each predictor variable. So they want me to carry out variable hypothesis test, variable significance tests. And they're giving me the level of significance here is 5%. So we start with this Roman 4. Very easy, very easy. So this is what they want us to do, ladies and gentlemen. Yeah. Yeah. So then in this case, what we shall do, we shall go ahead and read the T tables value. T tables value. Because these are variables, significance tests. We are using, ladies and gentlemen, the T statistic. So then here we have to read the T tables value. For us to be able to read this T tables value, we need number one. Yeah, what do we need? We need degrees of freedom. Degrees of freedom. And these ones will always be the error degrees of freedom, always, which you guys had given to me as 11, always. We shall use the degrees of freedom, error degrees of freedom. So remember these degrees, error degrees of freedom are the ones we got by taking n minus k minus 1. Yeah, 11. And then number two, I need the level of significance. I need the level of significance, which in this case here is 5%. So the level of significance, we write it like this, it's 5%. The level of significance is 5%. Those are the two items that I need to be able to read the T tables value. And it's very easy to read this T tables value. So how do I read it? It will be very easy. It will be very easy. So it will be very easy. Just allow me to come here and read it for you. Just want to read this for you. Very good. Very good. I'll be able to attach the two documents. So this student said distribution was discovered by a student just like yourselves. Very, very serious student who discovered this. Yeah. So you need two things for you to be able to read this. Yeah. So you can see, ladies and gentlemen, here, they have given us here level of significance, and then you have degrees of freedom. So we have 11 degrees of freedom. So you work with this up to the 5%. You see 5% is the same as 0.05. So then the T that we have here, it will be 2.201. So we call it T critical. Please see this. They've told us the level of significance is 5%. Yeah. And 11 degrees of freedom here. So we have 2.201, this one here. T critical, T tables is 2.201. So then our T critical is 2.201. Yeah. So in this case here, this T tables value is 2.201. 0.001. So remember, this is the hurdles value. Yeah, this is the hurdle. Yeah, you exceed this, then you are very significant. You are very, very strong. You are very, very strong. Yeah, so come and give us your parameters. Give us your parameters. So parameters, what do we have? There are 3 of them. We have constant. Yeah, then of course we have, these are the coefficients, eh? Coefficients. Then we have the t, all right? So let me just write the t ratios alone. So the t ratios. Yeah, the t calculated. So what is the t value of the constant? T value of the constant. Please open up your paper. The constant t, it will make sense. You should not panic at all. These will make sense in a moment. The t value, the t ratio for the constant. Yeah, somebody is telling me 0.34. Is it? Are you sure? Are you sure? That will be very small. It means that that constant is bad. Are you sure? I doubt. Let me just project this. After all, you don't even have the paper. Let me just project this. Let me project this. Yeah, they're right. Yes. Because they had copied this down. They're right. They are right. Yeah. Remember the constant had a t ratio of 0.34. So here we have 0.34. Yeah, that is our A. And then our x1 has 2.42, and then we have our x2. X2, ladies and gentlemen, has a t ratio of 2.61. T ratio. So remember, we are using the t statistics. And the t statistics will always have what we call the t table value for all of them, which you've been able to read from the table, which is 2.201. This is the measure of significance. So like now you can see this constant has a value which is 2.201. It has not been able to pass over our hurdle. So it means that the A value is insignificant. So A is insignificant. A is insignificant because it is less than the value of significance as given by student T, the table's value. But when you look at x1 and x2, these are robust. They are very significant. They are higher than this. So this is more than 2.201, meaning that x1 is significant. X1 is significant. X1 is significant, meaning that X1 is significant because already we were able to get the threshold of significance. T-tables is the threshold of significance. You can see 2.42 is bigger than this value. It's bigger than that value. All right. Then we have 2.61 x2, ladies and gentlemen. Again, this is more than 2.201. Therefore, x2 is what here is significant. This x2 is significant as well. So meaning that generally our model is significant. It's robust for purpose of prediction, except A that is really tiny, that is not significant. So then in this case here as researchers, we shall not tell this person to throw the whole model. No, we shall tell this person to go and increase the sample size to make these values here to be even more significant, including A, which is really insignificant. We shall tell this person to go and increase the sample size. So the most important thing that you're supposed to go home knowing today is how to read this threshold, the hurdle. Waswahili wanasema kuruka nini, ile kitu inaitwa namna gani? Yaani kama wewe ni kubwa kushinda ile unajua kuruka, unaruka juu yake, bigger. Unaruka juu yake, umeponea. Kigonga na mguu hapo unaanguka chini mara moja. So in this case here, you have to know how to read this T table's value by first of all knowing the degrees of freedom, which will be the error degrees of freedom, n minus k minus 1, which gave us 11, and then you must be given the level of significance. This is given. Even if it's not given an exam, we always assume it to be 5 5%. And once you've gotten now this, the T ratios are given there, or you can easily compute them. So you go for the T ratios for each one of them, asking yourself, which T ratio is bigger than this 2.201? If it's bigger than 2.201, then you are okay. If it is less, then it is what here? Insignificant. So ladies and gentlemen, please ask a question. 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 Because you've got none, I would want to repeat the whole of this by looking at another question. When I do another question, then we do your past paper question that came last semester, we should be fine. We shall pray it comes again, because this was really poorly performed. Poorly performed. Yeah, somebody is telling me, Mwalimu, this one, at least for now, it is okay. It is okay. At least for now, it is okay. And then now we go to the last question here before we start this other question. Yeah, thank you so much, Masimbudia. The T table is always given at the back of your paper. Whenever they bring a question of this nature, they shall give it to you, yes. What is never given is the F table's value, where they'll just be able to give you the F itself. I'll be able to show you right away. And this is the last question. I can see my number of students are going down. So you can see like here, comment on the statistical significance of the model at the 5% significance level, given that the F table's value is 3.98. Now, in this case here, we are looking at a whole equation, number 5 actually. So we are looking at what we call the whole equation. The whole equation, you do the F comparisons. So in this case here, it is the F statistics. Yeah, where in this case here, you start with the F tables. So the F tables, this has been given. This has been given in the question, it's 3.98. This has been given the question. Yeah, remember this is the hurdle rate. This is the hurdle rate. The hurdle rate. Yeah, should we get an F that is bigger than this, then we are safe. We are significant. We are big enough. So then you go to the F ratio from the question. We see how big is it or how small is it? Yes, yes. So you compare in this case here, this is a hurdle rate, which has been given, or hurdle value, to the F ratio, like in this case here from the question, yes. Yeah, so somebody is giving us Mildred 159.6. So 159.6. So in this case here, is the model significant or not significant? So this is really more than the 3.98. It's more than the 3.98. So meaning that the whole model is significant. The whole model is significant. The whole model is significant. So have they picked something out of these illustrations, ladies and gentlemen? Any student who attempted last semester's paper, if you got now that kind of a question today, do you think you'll be able to answer it? Do you think that question, even if you haven't looked at it, but now with this illustration, 3.98 imetoka wapi? It is really hard. Okay. No, A1Jiko is not hard. It's here. 3.98 is here. 3.98 is here. So then allow us to look at this question number 2 before you go to your past paper. So now question number 2, we are doing it together with you, right? Question number 2, we are doing it together, and then we mark here live. So an economist working for RTC Limited suspects that the annual demand of the company's sold product depends on the disposable income of consumers and the end price of the product. A regression analysis of the annual demand against the disposable income and the unit price of the product has been undertaken using the information available on the product over the last 10 years. A section of the results obtained using statistical software is given below. Analysis of variance, and then we have parameter estimates here. So they want us, A, to give them the estimated regression equation. Please help Mwalimu write that equation. Help Mwalimu to write that equation, please. Somebody help Mwalimu to write that equation. Remember this semester, we are very, very serious with this paper. This semester, we are very, very serious with this paper. Just write it, even if you don't get it right, so what? So long as you've tried, then that will really, really be good. Thank you, great. So you see, the estimated regression equation will come from these parameter estimates. You can see the constant is 0.7. You can see the income, then you have the price. So 3 of them. Yeah. So this is really easy. Easy peasy. Easy peasy. This is really easy. So the regression parameters have been given. So we have here y equals a plus b1 x1 plus b2 x2. So now y will be equal to a. A has been given. A has been given in the question. A has been given the parameter. A is 0.7 plus b1. It will be this 2.47. 467 x1 plus b2 is negative, so minus 0.659. Yeah, x2. If you wish, you can say this is y equals y. Remember, y was disposable income. If you wish, you can come and say income equals 0.7 plus 2.467. X1 variable itself is income. Oh, nope. Minus 0.659 x2, x2 which is price. So it means that y is not income. Why? An economist working for RTC Limited as annual demand. So this y is annual demand. So demand. Yeah. So this is what was expected of you in Roman 1. This is what was expected of you. You can either leave it like this, but plus minus, this will be minus, or you can come and put in the variables like that. Is there somebody who was able to get this correctly? Anybody who was able to think of this the way I've done it? They are not answering. They are not answering. Great. Thank you so much. So we look at Roman 2. So Roman 2 of this question, they want us to interpret the meaning of each of the above parameter estimates. Yeah, meaning of the above parameter estimates, because we already have the answer. Let me just explain here just a little bit, and then we read. So you see this 0.7 is a constant demand. Yeah, this 0.7 is a demand when the income is 0 and price is 0. You see, if income is 0 and price is 0, then demand will be exactly 0.7. Yeah, so this 0.7 is the constant demand, which is not dependent on income nor what year price. You have the answer, don't write. How about this 2.467? How do we interpret this parameter? It means that because this is plus, if income increases by 1 shilling, if income increases by 1 shilling, then demand will increase by 2.467 units. So if the income, you see, it's positive relationship. If this income just goes up by 1 shilling like this, automatically this will be the gradient at which the demand will grow. Here, if the price increases by just 1 shilling, because of the negative, demand reduces by this 0.659. So in this case here, the way we interpret this, the way we interpret the second coefficient is that if price increases just by 1 shilling, that's how you argue out. Yeah, then demand reduces by 0.659 because of the negative relationship. Because they wanted you to interpret this like 0.7 is the constant demand. That demand which does not depend on income and what your price. If income and price were to be 0, then the demand that is guaranteed is 0.7. How about this 2.47? Ladies and gentlemen, let me explain here using a simple equation. Assuming our y is 3 plus 2x. When x, for example, is 10, can somebody give me the value of y? If in this case here, x is 10, so this will be 2 times 10 plus 3. So 20 plus 3. So this is 23. How about when x is 11? When x is 11, our y will be equal to what? If x is 11, if x is 11, yeah, if x is 11, this will be 2 times 11, 22 plus 3. This gives me what here? 20, 25. So then check this. When x increases by just 1, when x increases by 1, what has happened with y? Y has increased by 2 because 20, 25. That's how you interpret the gradient. That when x goes up by just 1 unit, then y, because of the positive, y will increase by 2. That's how you'll also be able to interpret this. That when the income increases by just 1 shilling, the demand here, or the y there, it will be 2.467 increase. If the price was to go up by just 1 shilling, then the demand will reduce by that. And now I've given also the answer, which is there. Remember, it's all about you knowing how to interpret this generally. Yeah, they wanted us to interpret the meaning of each of the above parameter, estimates 0.7, like that. So 0.7 is constant demand. Yeah, demand which is guaranteed. If the income is 0 and the price is 0, the demand will stand at 0.7. What about this 2.467 gradient for income? When the income increases by 1 shilling, the demand goes up. Now, C, I want to see whether there is anybody who would have easily gotten C, where they want us to calculate the coefficient of determination, R squared. Let me give you 1 minute. You try that on your own. We see whether you'll be able to get really this. So now after this, I will straight away go to learning curves, and I'll be able to knock learning curves also in a very short span. So I love AMA. It has got really nothing much. So long as you've got students who are willing to learn, like after I've done this, now again, I want to see you on your WhatsApp discussing, but most importantly, ensure that this class, which now the Ninja has taken over, will really grow, should grow to 500 students. Bring students from whichever corners, all corners of Kenya. Bring students, bring students, bring students, bring your colleagues. All right. So coefficient of termination, I'm waiting to hear. Coefficient of termination, I'm waiting to hear. I repeat 5. Okay, I'm not seeing that question, sorry. Yes, Robert. You can also say that 0.7 is an increase in demand caused by other factors, not in the analysis, not the price. Yeah. 98 point, great. Let me check whether you guys got it right. Yeah, you can see a 98.0. So the model helps to explain 98% of the annual demand. And then 2% will be explained by other figures. So this R squared, ladies and gentlemen, to get this R squared, what do we need to do to get this R squared? So to get this R squared is really easy. It's really easy to get R squared. This is what we shall do to get R squared. So to get this R squared, we shall come and take the explained variance in terms of sum of squares all over total variance. Again, in terms of who? Sum of squares. In terms of sum of squares. Sorry. Yeah. So you take the explained variance in terms of sum of squares all over the total variance. in terms of sum of squares. Now, I hope you guys are able to remember that the model, you see, model is regression. Model is explained. Error is unexplained. And then we have the total. So then the model which is explained variance, some 93.5176. 93.5176 all over the total, which is 95.4 like that. This is how they were able to get 90, what is it, 96 or 98%? This is how they were able to get the 98%, 98%, like that, 98%. So meaning that the explanatory power, the power of this model to explain variances is very high. It's 98%. It's 98%. So it means that the income and the price can explain up to 98% of the changes in annual demand. And that is excellent. That's exceptional. Very good. Thank you very much. Ladies and gentlemen, I'll be able to take you straight away to this one here. Yeah. So D, they want me to test the adequacy of the model for prediction, and they've given me the F tables value as 9.55. So the only thing I need to do is to come and calculate F ratio from these things. Somebody calculate F ratio for us. F ratio. So first I have the hurdle rate. So we have the hurdle rate. So here I'll be interested in two things that I would want to see you doing before our next class. Yeah, I would want to see how you're getting the, this, you see, like sum of, now you get mean sum of squares, give us the F ratio. Is it bigger than 9.55? Very big, that's very good. E, test the significance of each predictor variable. They want me to get the T values. Yeah, get the T from the T tables, and then I get the T ratios myself. So I have to get the T ratios from this coefficient divided by the standard error. So I believe, ladies and gentlemen, this being our day one, that can be your homework. We have given justice to this session. So it's my hope that we shall be able to do very well with this subject, and all of us will be very happy by the end of the session, by the end of that training. Otherwise, thank you very much for giving me your ears and your eyes. Thank you. Great. Have you enjoyed the session? Have you enjoyed, most of you, of course, you have come in, this is your first session. Have you gotten something out of this session? Have you gotten something out of this session? Great. Yeah, I'll share the handouts. Let me just go to my phone right now. I'll share the handouts, everything. Thank you so much. Thank you so much. Bye. Bye. Thank you. Yeah, we shall be able to put this in the LMS. Kaburu, we shall put this in the LMS, yeah. All right. No. So you see, we have the normal classes which come on Wednesdays and the Sundays. Wednesdays and Sundays. Yeah. Of course, even the way I teach those ones, you'll be able to see that they are special in nature. They're special in nature. However, for purposes of us now increasing the intensity of students doing past paper questions, we must introduce one more session. So you guys will be able to tell me which is the ideal day of this one extra session, basically for practice now. Where we say, for example, like now Mwalimu has done regression, are we able to answer all the regression questions in the past paper? So we need one extra. So I don't know whether Saturday is what is good, but that is what we can argue out in our respective groups. That's how we shall be able to make this class more special. Thank you. Yes, this semester I'm the one taking you through. This semester I'm the one taking you through 100%. 100%. Those old days when Kasnev used to give like who is the best lecturer in this and this subject, I always took the best lecturer for AMA for so long. Until I said, this paper is very easy. Let me run away from it. And then I do what? Other papers. But I think I was a little bit wrong, but we shall overcome. All right. So thank you very much. So we shall discuss about that later. We shall discuss about that later. One term should be very good, yes. Cheers then. Okay. Cheers. Or in anything